All right, first up, a look at the Asian markets. They are mixed and more by and large higher as we speak, and this on account of a strong handover coming in from the Wall Street. Strong jobs data, close to around 175,000 jobs added in the previous month in the US, and that comes after a disappointing set of 20,000 jobs added in the month prior to that. Also, there was some optimism on the US-China trade front, so which is taking the Asian markets, or keeping the Asian markets afloat as we speak. The Nikkei absolutely flat, some bit of weakness seen in the yen. We have the Korean index trading with mild gains. Along with that, we have the Taiwanese index, which is actually outperforming with a larger gain, close to around 0.8%. The Straits absolutely flat. We'll await the opening of Hang Seng Shanghai as well as the other indices, primarily on account of the fact that they were shut on Friday's trading session on account of Qingming holidays. The SGX Nifty absolutely flat. Let's see how we go ahead from here.
Okay, so Asian markets off the day's high, but also let's take a look at what happened in the US markets on Friday. Remember, the stocks there posted their second consecutive weekly rise on Friday as investor sentiment was boosted by better than expected jobs data and the progress on the US-China trade front. CNBC's Rahil Solomon gets us a wrap of all that transpired on Wall Street on Friday.
U.S. stocks finishing the day higher thanks to a strong jobs report. The Dow up 40 points, the S&P gaining 13, and the Nasdaq higher by 46. The job market bounced back in March, the U.S. economy adding 196,000 jobs, and the unemployment rate holding steady at 3.8%. That's according to the Bureau of Labor Statistics. This after February added just 20,000 jobs. Meanwhile, Boeing cutting production of its 737 MAX jets by 20% as the company moves to finalize a fix that will get the grounded aircraft flying again. 737 MAX has been grounded for several weeks as investigators look at the role the plane's onboard equipment played in two separate deadly crashes. Shares of Boeing falling in extended trading. And Apple Music has reportedly surpassed Spotify in paid subscribers. That's according to the Wall Street Journal. This marks a milestone in the race for streaming music dominance. But Spotify still beats Apple with more subscribers worldwide and more users in the United States when free users are included. And that is the action from the U.S. market. Back to you in Mumbai.
Okay, on that note, let's hear out what experts have to say about the upbeat jobs report as well as the road ahead for the U.S. markets.
Employment population ratio, I always look at that. It is down. It's down a little bit. The easiest way to get at that is to look at the people who are not adversely affected by the demographic trends, namely look at the 25 to 54-year-olds. And what's happened there is we have had some pretty good progress there. We brought in about 750,000 of those people over the past year, but over the past couple of months, it's flattened. So it does look like we're starting to reach, I don't want to call it a peak, but we're definitely slowing down in terms of where we're going to see the labor market going.
The bar is much higher coming into this first quarter reporting season than we were at the Christmas lows when companies were coming out and they were originally revising down some expectations. So at 2,900, we think we're a bit stretched, particularly given where we see first quarter earnings. What investors should be doing is thinking longer term. And what we've been advocating is you want to buy offense and defense today and not overpay. The challenge today is defense is really expensive. The challenge is that we're late cycle. So if you just want to go pure offense, we don't think that's necessarily a good idea.
All right, and across the Atlantic in Europe, key markets ended mildly higher as the US posted a solid rebound in job creation in March. Remember, the US non-farm payrolls expanded by 196,000, beg your pardon, earlier I said 175,000, 196,000. This against expectations of 175,000, while the unemployment rate held steady at 3.8%. Investors are monitoring a whole lot of developments in the UK with regards to Brexit, so that is something that will keep that is something that the street will keep an eye out on. There was German data which came in on Thursday, which kept the investors on tenterhooks as well. But in the emerging market space, the Brazilian index did fairly well, again of close to about 0.8% coming in there.
Okay, let's now shift focus to the currency space. The dollar retains modest gains after a better than expected US jobs report data. The dollar index currently holding above the 97 level. Remember, last week we had seen the levels of 97. The upbeat jobs rate data has put to bed the fears of a sharper slowdown in the world's largest economy, that is US, and the dollar index really holding steady.
The world of commodities, crude oil prices retreat from 5-month highs in early trade. Escalating Libya conflict, however, keep the prices on edge. They have now comfortably crossed the $70 per barrel mark.